With China's sustained growth, the performance of the world's leading economy is closely watched worldwide. Over the past few decades, China has undergone remarkable transformation and development. Meanwhile, China's cooperative relationship with other countries are strengthening, exerting profound impacts on the global economic landscape. This collection features insights from experts in the international economic arena, discussing the current situation and the prospects of the Chinese economy from various perspectives.
It'll look a lot like 2023. That's what any of my friends who are economists will know what I'm doing. Economies tend to, there's a really good statistical model of GDP growth. It's called a geometric random walk with growth. Continue to grow about the same rate. There'll be shocks, it's hard to beat that prediction.
And I've visited China for the past 3 decades, many, many times. I have many friends in China and many friends in South Africa of Chinese origin. And I tell them that when I first went to Beijing, there were more bicycles on the road than cars. But today, China is developed so dramatically. Today, you have the largest network of roads, of speed trains, your infrastructure, your industries. You are a leader today in technology. You're a second largest economy. And I've seen the cities of China develop and become major global cities that not only rivals, but has better infrastructure than the best cities in North America and Europe today. China has become a leader in the world in every sector of human endeavor. And I've been very privileged to witness the rise of China and to be part of this journey and to see China become this major power. Now, China being powerful is not only good for China, it's good for the developing world. It shows us what is possible, that the template of development that China has employed to lift its people out and to become a leading nation of the world is possible for all of us.
Yeah. So on the China story, what we saw with the pandemic restrictions that were sort of tightened again in 2022, that really weighed heavily on consumption, and it was something that was constraining what we call contact intensive consumption. So consumption that means that you have to be close to other people. So going to the cinema or going to a restaurant, going to a busy shopping mall, all those things were constrained heavily by the pandemic. So when those restrictions were removed, although there was some initial reluctance because people were obviously, there were still health concerns, the removal of the restrictions, led to a bounce in consumption on those contact intensive services. It was exactly the same pattern that we saw in 2021 and 2022 in the Western economies when they finally removed the pandemic restrictions. That was what drove the normalization in China.
Yeah, we are quite positive about China. We are very optimistic. In fact, if we compare our forecast with the analyst forecast, I think we are at the high end, because we are expecting China to grow by 5.3%, right? Slightly higher than last year. But most of the analysts are expecting growth of below 5%. I think the average is maybe between 4.5 to about 4.5, 4.8 in that range. So we are optimistic, and the reason we're optimistic is because we still see China has not fully recovered. Okay. And last year was not a very good year for China, even though it grew by 5.2%, because of the headwind from exports. And also because we see that domestic spending has not fully recovered. So this year, we expect China economy to do actually better because the headwind from the real estate sector is going to be smaller, okay, and maybe even turn positive this year if the real estate sector is able to recover slightly. And then the other sectors are doing well. Manufacturing is doing relatively well. If you look at manufacturing investment, it's actually quite strong. And I think I mentioned earlier that the retail spending is also picking up. We see that in the data, the indicator that has turned up. So for all those reasons, we think that this year the economy could actually be stronger. Growth could be stronger than last year. Of course, along the way, there could be other shocks that happen. But but we are optimistic that the Chinese economy will not be as weak as some of the other estimates that we have seen. Yeah. China is the biggest trading partner for ASEAN, and ASEAN turned out to be the biggest trading partner for China during the pandemic. So they are each other's biggest trading partner now, right? And so a strong growth in China would be good for the region, and similarly, a strong growth in ASEAN would be good for China. But China is also the biggest trading partner for 150 countries around the world, right? So it's a very important economy for everyone, But I think the main thing about China now is that because China is at the stage of development where it's beginning to outsource, it's moving up the value chain. So it's beginning to outsource the labor-intensive sectors, like garments, and some parts of manufacturing as well. So if you look at Vietnam, Cambodia, and now Malaysia, they are attracting investment from China now in the manufacturing sector. So the Chinese industries are beginning to move their production to Vietnam, to Cambodia, and the ASEAN countries. Besides that, China is very probably the most advanced in terms of electric vehicles, batteries, solar energy, wind power, mills energy. So, and because of the climate change, a lot of countries are now moving away from fossil fuel to renewable energy, right? And so many of them are trying to attract, investment into the new EV industries from everywhere. I mean, not just from China, but China is one of the biggest investor now, in EVs, right? So Indonesia, because it has a natural resource in nickel, right, is a very attractive destination for Chinese to set up production because they can leverage on the nickel deposit there. But also Thailand and Malaysia, because they already have an auto industry and they want to shift from fossil fuel to electric vehicle. So they are also trying to attract the Chinese, electric manufacturers to move their production to those countries. And besides that, I think they're also trying to attract investment in solar energy, in wind power energy, and this other area. So there's a lot of investment flows between China and the rest of the region, which is very important because in the old days, China's investment in most countries used to be just in natural resources, mostly copper, iron ore, coal, and all that. But now China is also investing in manufacturing and services. Alibaba, Tencent, now they are big players in the global stage, and they are also investing abroad because they also want to, diversify the market to other parts.
As an academic, I study economic growth globally, so it's part of what I do. That stuff happens as you become more and more developed. Growth tends to converge. So I do think that there is a runway for China to have this. The 5% is great. The U.S. would love to have 5%. Europe, they would be celebrating with 5% growth when they're kind of stuck at 1% growth. So I do think that there are some headwinds for China. And it's always good to kind of recognize what they are so that you can develop like a plan. So one headwind we've already talked about, this sort of deglobalization. And I do think that certain policies could be put in place to mitigate the extent of that. So I think that that's something that can be worked on, but it doesn't need to be going forward. So that's one factor. There are structural factors for China, and this is not just a China factor, but other countries experience this too, and that is the rate of population growth. So China made a decision in terms of the one-child policy that is going to affect the medium-term prospects. And also just fertility has gone down. China's not the only country. So you can see that that happens in the US also. But the US kind of replaces the decrease in fertility with immigration. And other countries kind of do the same thing. So I think that that also is a headwind. And again, that's something that policymakers should be thinking of. There are other issues. Obviously, if there are geopolitical risks, that impacts the willingness of people to invest in any country. So if the country becomes more risky, that just means that the hurdle for investing in that country goes up. Something riskier, you require a higher rate of return. Again, some of this risk can be mitigated by policymakers. And the last thing that I'll mention, and hopefully it's obvious, and I tell this story to all of the audiences across the world, that innovation is really important. So innovation is just like the driver of growth. And the US has done a really good job. So why is it that they are out ahead so far on all these innovations? So this is, again, not just advice for China, but advice for any country, that you need to have in place a policy that encourages innovation and to let people discover stuff. And most of those discoveries will turn out to be failures. It'll go nowhere, but you're looking for the big ones. And the big ones really drive economic growth. So I think that's really important in-house or in-country. Develop those capabilities to encourage innovation. It is the best way to grow. It's interesting that China and the US face a very similar sort of demographic problem, that with an aging population and government programs that's supposed to support the aging population, the money, it's not obvious that it's there. So this is why innovation is really important, that China needs to maintain that 5% growth rate. And the US needs to substantially increase their growth rate. The US Social Security will run out in 2023 or 2033. So we've got like 9 years. And that is a huge liability. And we need to grow. So the US needs to grow. China needs to grow.